Array 50% returns. Correct, you heard me right. So I'll tell you the magic formula of how to get up to 50% returns by investing in penny stocks. 3 simple steps. ध्यान से सुनो, फटाफट बताने वाली हूँ. First step, identify companies whose stocks are trading somewhere around 5 rupees. Identify 1000 such companies and invest in that. So how much is amount invested? 5,000. You got me right. Now send an email, step number 2, to all these companies and ask for a physical copy of the annual report. Now each annual report will weigh somewhere around half a kg. Now half a kg for one annual report. How many annual reports you have? 1000. Correct. So now the weight of your raddi, sale or scrap, that's going to be around 500. Now the rate of newspaper scrap in Pune at least is 15 rupees per kg. So how much is the amount that you will receive? Correct. 500 into 15, that is 7,500. Amount invested was correct, 5,000. So how much is your return? 50%. Hey folks, CA Rachana Ranade here and I welcome you all to a very informative video which is going to revolve around penny stocks. Before we move on, let me give you all a warning. Please don't try to imitate whatever happened in the pre-bumper of the video about 1000 stocks of 4 or 5 rupees. That can be hazardous for your portfolio, right? So what are we going to learn in this specific video? We are going to talk about what are penny stocks, how to analyze them, what are the risks associated with them, what are the common misconceptions about penny stocks, and finally, should you invest in penny stocks or not? So without any further ado, let's get started. So what is the first question that pops up in your mind? That is nothing but what are penny stocks? So when I tried to find the definition of penny stocks, to be honest, I did not find any exact definition in any law or act. Even we tried to find out SEBI circulars, no definition was mentioned. But then what we did, we went through a lot of newspaper articles, web-based articles, and one common kind of a definition is what I can say was found everywhere. And what is that? It is based on 2 different conditions. Number 1, price-wise condition, and the second one is value-wise condition. Now what is price-wise condition? It says that the market price of that stock should be less than rupees 10, okay, and value-wise condition, it is value-wise means market cap-wise, okay, it mentions that it should have a very low market cap. Simple till here. Now let me give you an example so that it's fit into your mind. The very first one example can be Idea Vodafone. Can I say it satisfies the first condition? Yes, currently as I shoot the video, it is trading somewhere around 9 rupees. So first condition, price-wise condition is met. What about value-wise condition? Value, whatever, again as I shoot the video, market cap of this stock is around 30,000 crores. So I can't say that value-wise or market cap-wise it is penny. Okay, so Vodafone Idea cannot be classified ideally as a penny stock. Right? I'll give you another example now. GM Polyplast or Hindustan Hardy, and I'm sure you have never heard of these names, okay. Now, if I talk about these 2 stocks, first one is a price-wise condition and both these stocks are somewhere around 300. So, is the first condition met? No. Second condition, market cap of both these stocks is very less. So, is the second condition met? Answer is yes. But then still, because one condition is not met, it is not to be ideally considered as a penny stock. Now let us take an example of a stock which was the talk of the town last year, and that is nothing but TTML. Can I say at that time, somewhere around beginning of 2021, was the first condition met? Yes. It was trading somewhere around 7 rupees. Was the market cap also very less? Yes. Now let's have a look at the chart of TTML. Have a look at this. Now if I were to measure the returns from somewhere around 1st of January 2021 till 11th January 22, where the stock hit the highest point of almost 290, the returns come up to more than 3,500%. That's a mind-boggling rally, right? But then if you see, were people really able to get into this stock or not? So this might have been a zone where few people might have entered because the stock was in a sideways trend for quite some time. But you know, once the stock actually starts rallying, that is where the FOMO also starts getting built up. And for those, all the Dukhi Atmas who are not able to enter at lower levels, they are going to be like, oh my god, I'm just missing out on the rally, and this stock just hit massive back-to-back upper circuits to reach till almost 291. Now the question was, why was this big rally? Why this rally happened in TTML? So for that, I'm referring to a Mint article, and in that they have mentioned that according to a business standard report, they suggest that Tata Group was looking to revive Tata Teleservices by taking technical expertise for a new app which they were going to build, Super App. Now what was the thought process of this Super App? They were going to bring all Tata Group related products and services under one platform and enable sales directly to the consumers. For this very thing, Tata Sons had infused almost 46,595 plus crores till June 2019. So because of this, there was a big buzz in the stock and the stock rallied from the levels of whatever I told you right now, around what, 7 rupees till continuously 290 rupees. Okay. Now the problem is that after this rally happened, there might be some dukhi atmas who found entry after the stock started hitting lower levels, and they might be like, it has already gone down from 290 to somewhere around 250 or whatever. They might have entered at that level. Then starts the journey of the lower circuits and the sideways trend and the downward trend, and as I shoot the video, the stock even today is trading around 113 rupees. Now the question was that why did this stock not perform well? Why the downfall from 291 till almost 113 rupees? In the same article of Mint, you can see, of course this is a little backdated article, but it's interesting to read these two lines only. For the financial year 2021, of course as I mentioned, thoda purana data hai, previous year, 2000 crore rupees is the amount of loss that this company is in. And number two, out of last 40 quarters, only for last 39 quarters, the company is in continuous losses. I hope you have understood how it impacts a specific stock if the fundamentals are not strong and the stock is driven purely based on news. Well, like we saw in the case of TTML right now, where the stock surged from barely 7 rupees to directly 291 rupees in a span of 1.5 years. The stock hit back-to-back upper circuits for quite a long time based only on news. But then a stock can't just go up and up forever, right? Then the stock started to go down and down and down because the fundamentals of this stock were not really strong. So please make a point very, very clear in your mind. Please don't invest in any stock, not even in penny stocks based only on news. It has to be a fundamentally strong stock, because a stock, if it has fallen by even 40% from the peak, it does have a capacity to fall by another 40% from that level if it is fundamentally weak. Let's move on with few more risks which are involved while you are buying penny stocks. The very first one is that there is a big gap between the ask rate and the bid rate. So typically we call it as a wide bid ask spread. Now what is this? Seller is wanting to sell at this level, buyer is wanting to buy at this level. So there's no match, right? Trade will not take place, and this can hamper the volumes. So higher the bid ask spread, it's not going to be good. That will be treated as a risk. Second thing is that these stocks are typically not very liquid. Means what? When you want to sell such stocks, you might not always find a proper buyer for that stock, and you may get stuck up in such stocks, and that is nothing but lower liquidity. Third one is that lack of information. Now what do I mean by this point? Typically in case of penny stocks, you might not find investor presentations, you might not find con calls for such stocks, and that is why the information that you are wanting from this stock can be a little bit hard to get. And the last one is that many of these penny stocks are into the T to T category, that is trade to trade category. Means what? You are not allowed to do intraday transactions. So even if you have bought at, let us say, 5 rupees and the stock has gone up by few paisas, still you will not be allowed to sell on the same day because it's a T to T category. Now when I talk about risks, what do you feel? Risks are involved only in stock market, or risks are there in almost all walks of life? Answer is correct, almost all walks of life. Be it your even health, you are surely exposed to a lot of risks, and that is why having a proper health insurance is really, really important. But what can be a good portal to visit? For that, let's have a look at the Policybazaar portal, where you can get 30 minutes claim support, and also you can schedule home visits with their advisors, right? So once you have decided to cover yourself, how do you proceed through the Policybazaar portal? You just have to fill in some basic details. Now once you have filled in the basic details, it will show you various insurance policies. Specifically right now we are discussing about health insurance, right? Now you can find quickly what are the most popular plans. So they'll filter according to the most popular plans. Then you can also get something like lowest premium plans. So again they have some ready-made filters for you. You can go through them. Then in addition to that, if you want to specifically compare two plans, so this is just an example, okay? This is no specific recommendation. You can just add to compare whichever plans you like, and then just hit the compare button. Once you do that, you will get to see based on a lot of points like claim settlement ratio, room rent, COVID-19 coverage and whatnot. Based on that, you can easily take a decision on which policy you want to opt for. If you want to know more in detail, just check out the link in the description box below and get yourself insured. Also, one more very important point is that many people feel that I am anyways covered through a corporate plan, then do I really need an additional insurance? I personally believe that insurance has to be personalized as per your needs, as per your requirements. So don't forget to check out the Policybazaar link in the description and then choose your insurance plan wisely. Now let's move on with how to analyze penny stocks. You'll find many friends who will say that Arey, this stock is only of 1 rupees. It will definitely go from 1 rupees to 2 rupees. एक ही तो रुपए का point है, आराम से जाएगा. And if you ask that person that why do you feel it will go from 1 rupee to 2 rupees? And he'll be like, मला असं वाटतंय, अंदर की आवाज, I just feel that it will go from 1 to 2. That can't happen. You should have done a proper fundamental analysis and then you should have decided whether you are going to invest in this stock or not. But exactly fundamental analysis means what? What are some 5 basic points that you need to check? Number 1, you should check the business model. Do you find their business model promising? Not only based on that specific company, just try to see whether that business model is in line with the industry needs and with the overall economy needs as well. Second thing, you can also do a management analysis for that stock. Third thing, you can try and see what is the management's vision, what is their mission, what are their different objectives for the company. You can also try and check the shareholding pattern of the company, because initially if the promoters themselves don't have a lot of stake in the company, they might not be that much motivated to grow the company bigger to the next levels. Next one, you can also check the financial ratios, something like ROE, ROCE, the sales growth, profit growth and what not. But if you want to learn about fundamental analysis in absolute detail, is there any way out? Answer is obviously yes. You can just go and check out my website rachanaranade.com, and there's a course on fundamental analysis wherein I have not only covered how to do analysis of a specific company, but I have also done how to analyze industries and how to analyze the economy as well. So you can also use that coupon code to get some additional discount. Now let's move ahead with 3 misconceptions or fallacies about penny stocks. The very first one is that any listed stock was once a penny stock. Now with this, many people feel that any company which is listed on the stock exchange was somewhere below 10 rupees once upon a time, and today it might be in some hundreds or in 1000 rupees. That is not the case. Many stocks get listed on the stock exchange as a large cap itself. Latest example can be of LIC, which got listed on the stock exchange hardly 6 to 8 months ago, and that got listed as a large cap stock, right? So first misconception is clear. Second misconception is that a stock which is, let us say, of 1 rupee can easily go up to 2 rupees. Why? Only it has to go up by 1 rupee only, na? Don't calculate these returns in terms of absolute numbers. Try to calculate the returns in percentage terms. If a stock were to go from 1 rupee to 2 rupees, it is a 100% return. It is saying something like a 10,000 rupees stock, if it were to go to 20,000 rupees, now that sounds scary, but it is the same because it is again 100% returns only. So if you feel 10,000 to 20,000 is difficult, similarly, even going from 1 to 2 is also difficult. The third fallacy or misconception is that TA works very well on any stock chart. Typically, what I have seen with my personal experience is that TA typically doesn't work that well on penny stocks. Simple reason being that such penny stocks keep on hitting upper and upper circuits followed by lower and lower circuits. Even if such stocks show a good chart pattern and even we see some breakout, typically the volumes are on a lower side. So breakout is not that convincing, and that is why the chances of failure are pretty high. Well, now that you already know about what is a penny stock, you have understood how to analyze them, you have also understood about some misconceptions about penny stocks, and still if you are having that question, all in all, Rachana, main question, tell us whether to invest in penny stocks or not. For that, मैं कितना भी ज्ञान दूँ, final thing is that we are human beings, and when a stock starts going higher and higher and higher, we feel that I should invest in that stock. But then if you are getting that FOMO, my personal suggestion would be that invest only party fund amount. See, ideally not to be invested. But if you are getting that aaj kuch tufani karte hai pattern, maximum is what? Only your party fund amount. Then you will be like, balance major chunk of money, where should it be invested? Obviously, it has to be invested only and only in fundamentally strong stocks. If you have found value in this video, please don't forget to share it with your friends. Don't forget to hit that like button. And if you want to know more about fundamentally strong stocks under 100, you can click here. And if you want to know more about fundamentally strong stocks under 500, you can click here. Till then, take care. Jai Hind and bye-bye.